Good morning, everybody. It is Friday, January 26th, 2024. Leisha, we're already almost a month into the year already. It is amazing how time flies.
It
Uh,
truly is.
Good morning. Good to see you.
Good morning. How are you?
I'm doing great. Happy Friday. PCE is out. This is the Fed's favorite indicator. This is the personal consumption expenditures, personal income. The PCE month over month expected 0.2% increase falls right in line. Core also in line 0.2. PCE year over year expected 2.6 comes in 2.6. Core expected 3 comes in 2.9. So call it a tiny bit lower than expected, but essentially in line. Personal income comes exactly in line. Personal spending was expected to be 0.5. It was a 0.7% increase. So, Leisha, personal income increased 0.3%. Spending increased 0.7%. Sounds like some people are putting on some credit card debt.
Yeah, that's what I was going to say. Spending money that they may not have.
Spending money that they ain't made yet, as
Yeah.
some might say. Uh, pretty, pretty interesting. In reaction to that, futures initially got a really nice pop, and then have kind of fallen back to kind of where we were prior to the announcement. We're down 7.5 points. The NASDAQ looks a little uglier. We're going to talk earnings here in a second. But, initial reaction to that PCE number, not personal income and spending, pretty much a non-event right now,
Yeah,
it looks like.
I
Um,
would say.
we did get a decent move out of the treasuries. I'm looking at the 10-year note, and it went from up on the day to down. It had a pretty nice candle. So, I think we're going to make some decisions here in the next few minutes. What's your take on everything we just on markets this morning?
I thought that we were getting toppy. I thought we were topping out. I thought bonds were ready to fall lower. If you would like to see my bond chart,
You know what?
show you.
Let's roll into charts with Leisha. How does that sound? Let's
Yes.
take a look at the bonds with Leisha. What do you got?
Here's the 10-year. Also, I have here the 10-year note here. They'd fallen through my first pitchfork. I created a new one. Yesterday looked bullish though. So I was thinking overall we were toppy. If the market's still following bonds had caught a bid yesterday.
Mm-hmm.
So I was coming in short. I covered. I'm coming in flat today, just because of this a little bit of bullishness here in the bonds in the 10-year. But if you look at E-mini futures,
Oh wow.
we are pretty toppy. Doesn't mean we can't consolidate here, which looks like what we're doing, and take another leg higher. Which I think we could be trading higher, especially if bonds keep the bid, look stronger.
Yeah, I think that looks pretty darn interesting. It's been a rough
Here's the
slug for things have been pretty choppy in the bond market the last the month, but that has not
right.
stopped the stock market.
Here's the 30-year, and this is a very bearish candle. But then, yeah, that was Wednesday. Yesterday, this little tiny inside day, looks like a doji, but it's a little inside day. That's called a harami. I think we've talked about harami before. Means pregnant in Japanese. That
Okay.
means this bearishness may not be real. Not so fast, don't go short. We could bounce from here.
Okay.
So,
So
but
a harami is a small candle inside of a big engulfing candle.
right, it's an inside day that negates the candle, that in this case, bearish, kind of stops it. We'll see though.
Yeah.
That's why I covered my shorts.
I think that was well, you look at the way the market was moving yesterday. I'm not one to argue with you. We've been kind of you're right though. We have been consolidating. S&P futures have been stuck between kind of 4,900 and 49 and a quarter now for what feels like a week, and the S&P 500, which made a pretty nasty move higher to start the year,
Yeah.
has seems to be just sitting here kind of consolidating, as you said. um we've got to, and we're going to talk about a few of these earnings here in a little bit, but we had all of these earnings hit, and that has been one of the big drivers of that Netflix basically kind of, I think, caused the market to get that sick rally over the last couple days.
Netflix, incredible.
I
But
know.
if you think about it though, everyone, binges, watches all these shows. Netflix is huge, right? Everyone has it in their home, I believe.
I have too much streaming, and my goal is to remove some of my streaming services.
Netflix started in our pit. We acquired
Oh,
Netflix when it started trading options in the Citigroup pit.
oh wow.
It was like $8. It, we started trading options on it.
Oh
I
wow.
don't way, 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 way back when.
Oh, that's awesome. And was it kind of dead at first, or was it always
Yeah,
busy when you
yeah.
started trading it?
It was pretty quiet at first.
Huh. So it was pretty chill, you might say.
Yes, it was.
All right.
Then it would get busy though. But that's way back when, you were mailing. Weren't you mailing
Right.
the DVDs
Yeah.
back and forth?
Yep. Yeah, you were. Um, and but it was interesting how forward thinking they were, that they call themselves Netflix and not, because though you really weren't using the internet it was just DVDs, right?
Right.
Pretty fascinating. And it's amazing how quickly they put Blockbuster out of business. I mean, it's unbelievable.
Yes. Yes.
Um, so all right, well, now, Leisha, the other chart I wanted to kind of circling back, the other chart I wanted you to go through was Bitcoin,
Oh,
because
yes.
they
I was
listed
going to
the
bring that
ETF.
up.
It's now been what, like 2 weeks since they listed the ETF, and it has been just nothing but sadness. Where does this end,
I
Ms.
think it's
Leslie?
ending right now as we speak. Look at how it traded down. Now, you've talked about it before. Bitcoin is great for technical analysis because it trades nonstop, right? We don't have
Mm-hmm.
gaps. It's continuous. And here it traded right down to my median line. Nice hammer. A hammer's found at the bottom of a downtrend, signaling a change in that trend. Had a little consolidation. It's at my old support, new resistance there. Took a little bit, couple days to pop up and break through. Now it's got a little resistance here, 41,380.
Oh,
But
wow.
I think it may be ready to bounce.
All right. Well,
So
guys,
I was go ahead.
who's ready, everyone listening, who's ready to jump in with Bitcoin here? Is it just me and Leisha, or are some of you using this sell off as an opportunity to jump in? So, Leisha, you say this is a potential bottom. What about some of these Bitcoin alternatives? Because I think what's interesting about the ETF listing is there's been a bit of a break between your old kind of Bitcoin kind of tracking stocks and
Yeah.
and Bitcoin physical now that there are these ETFs.
Well, I still cling to Coin, Riot, and Mara.
Yeah, yeah,
I think I like Riot or BITO.
yeah. Well, BITO's the future. That should not see a big, huge correlation break.
Right.
But I think some of the arguments for investing in a name like Mara or Riot are that use case has lost a little bit of its value because now you have these ETFs.
You could be right. You could be right. I would think there would still be some correlation.
Oh yeah, no, I agree. There's going to be a correlation, but I don't know that they're going to because Riot owns Bitcoin, right? I mean, there has to be a correlation there, right? But I just think there's going to be a kind of a change in demand for the stock, right? People were basically using this as a proxy for Bitcoin. And now that there's these Bitcoin ETFs, I don't know that you need that proxy anymore. So I think you're going to see I think at a minimum, you're going to see the volume decline on these names.
Yeah.
And you can actually see it later. I mean, look at.
Yeah, you can right here.
Mm-hmm. All right. So obviously we're in the throes of earnings season. Let's talk through some of these earnings that have hit over the last few days. To do that, let's bring in our own oracle of option, the opus of option traders, Mr. Andrews Opus.
Andrew,
how you doing, Alicia? Hey, Mark, how you doing?
I'm good. I want to talk earnings here because it's been an interesting. The one that I think caught everybody flat-footed is IBM is now back from the dead. It is no longer the laughing stock, redheaded stepchild
of tech.
Kid you kick on your way into class. The kid sitting at the desk where you bump their head over the back of their head as you're leaving or going to the bathroom or something.
You didn't do that, did you?
I was the one that got it, not me. I wasn't the one that felt it. But anyway, IBM is no longer the worst company in the world. They seem to have found something here. Andrew, what's your take? And then Leisha, I'd love to hear because we're at 10-year highs in IBM now.
Yeah,
10-year
kind
highs.
Of amazing.
It is. They were doing. I said this. I want to say like last year when NVIDIA started taking off. I'm like, how was IBM not participating in it? They were doing AI.
Right.
Watson was beating Ken Jennings 10 years ago.
Yep. No, we had we've had a lot of trades in Option Pit in IBM.
Yes, we've had a few good ones.
It's been a good stock for us. So yeah, I thought that was actually one of the better observations. Like, NVIDIA trades at 10 times the multiple at IBM. I know IBM is not a chip company.
No,
it's still 10 times the market cap, and they only make 2.5 times the earnings. So I know nobody cares about that stuff.
Right.
And I don't think it's going to stop NVIDIA from going up, but it does mean that IBM could have a little more, room to go.
Yeah, I agree.
When Lisa and I were Evo traders, remember when everybody was kind of position limit short calls in IBM just when it was in the 90s when it was going to zero?
Yeah.
That's all people did for 6 months. The stock went to nothing. And then I forget what that guy, Robinson or whatever, turned it around. But anyway, now it seems to be resurging. So
yeah.
And this is, I think, the best part about it is option prices are super, super cheap in IBM.
Oh, really?
Yeah. Volatility is like 20.
Yeah.
And the stock can make a move. So, the March 15 implied vols are 18.5.
Yeah.
Wow.
And
it just moved $20.
Yeah, and it moved $20 before it moved $20. So it's
Yeah.
like, like past performance is no guarantee of future, but when when people are looking for some AI, jingle, they might start looking for IBM if they start reducing some of their chip exposure, So
Yeah.
um
Yeah, and if we're in an era, if AI is gonna have a PE expansion, right? So Nvidia, the reason why it's rallying is they're expanding the PE ahead of earnings, right? So if all of AI is getting a expansion of price earnings ratio, IBM with the pop yesterday, its PE got up to 23.7. So a move to a 30 PE, which is lower than Apple, lower than Microsoft, lower than Facebook, lower than just about everybody. So move to 30. That would be a 25% rally in the stock. So you'd be talking that this thing could be
$40.
trading 250.
Yeah.
I don't think that's out of the question either.
No.
This is the exact same argument I made for Qualcomm 6 weeks ago when we started this show. And what has Qualcomm done? Gone straight up.
$30.
Yeah. You should listen to me when I say I think this stock is too cheap, folks. All right.
Yeah.
Now,
And there's actual call buyers in IBM. Just looking at the volume, if you want to cover it in your big money flow section at the end, but
there definitely are.
They're definitely call buyers.
Now, speaking of redheaded stepchildren, Intel. Terrible. I mean, how can this company be so horrible? Remember when this was the biggest chip maker in the world?
I do. Not very long ago either.
Do you folks remember when this was the biggest chip maker in the world? I do.
It's like
Alicia,
3 years
remember
ago.
that?
2 years
Well, I
ago.
know it's on the little stickers on every computer, right?
Well, it used to be. Now it's AMD and Intel. I mean, they were so big that on the Amex that it had its own pit. It was literally the Intel pit, and that all that traded there was Intel. And guys would be trading 1,000 lots and 5,000 lots and 10,000 lots all the time. I remember that our group 1 traders used to always complain about being on the Amex and trading Intel because a guy would walk in and quote some calls in Intel, and the group would make it 100,000, it'd be $104, 100,000 up, right? Which means they would buy 100,000 calls for $1, and they would sell 100,000 calls at 104. All right, that's how big the crowd was. So you could do the equivalent of, what is that? Is that 10 million shares of stock in a single trade in that pit? And the biggest complaint everyone had was like the DPM, who's the guy that's kind of in charge of the pit, would make a market like 5,000 up. So they'd be 5% of the market. And then someone would come in with 10,000 calls to sell, and the guy would get 30%. So he quoted 5% of the market and got 30% of the order. It used to drive a good gig. It was a good gig.
It sure was.
But Intel is down almost 10% this morning. Sorry for the story about the Intel pit, folks. I don't know if you guys like our war stories. Let me know if my war stories bore you. But Intel's down 10% and can't get out of its own way. Alicia, where is this thing going?
I'll show you my pitchfork.
All right. I love your pitchforks. Big fan.
Well, thanks. Topped out here. It looks like it's opening right around here, way down here. The next support level I see is 43.72.
Oh, wow.
And then from there, 42.
I'm going to be going through some a big, huge order that went up in Intel yesterday that I think is pretty interesting. I'm going to talk about how when a long is not a long, because this was clearly not a long. Yeah, Intel pretty ugly. Now, the other earnings that I wanted to kind of circle back on, we had a couple report this morning. Norfolk Southern down about 2%, nothing overly exciting there. Colgate Palmolive. Are you a Crest person or a Colgate person? Leisha or and Andrew or Andrew, you're like a
What's
Burt's
the
Bees
red
guy,
tube?
right? What?
Whatever the red tube is. Colgate? Is that Colgate? The red tube? I think I'm a Colgate person.
Andrew uses AIM.
AIM.
Remember AIM?
Where did he even think? I can't believe he just pulled that out of nowhere.
He uses, what was the other one? Not Close Up. What was the one that was was that Close Up? That was.
I remember Close Up.
Yeah, and then you had AIM, and then what was the one that had the three different ones in it?
Oh no, yeah, they had three different colors.
No,
AIM
that
was
Aquafresh.
white, red, and green.
Aquafresh. That's right.
I can't believe I remembered that.
You have Aquafresh, Close Up. Close Up was all red. It was the red one, and then AIM. And then
commercials were people kissing. Remember?
Yeah, exactly. Yeah.
You just have to use the right toothpaste.
Wow, I didn't know we could talk about toothpaste so long.
Well, it's amazing how many toothpaste there used to be.
Wow.
You know, but they, a lot of brands have consolidated. So, I knew that I was, I knew that I was using old toothpaste because I had forgotten my toothpaste at my parents' house. I went and visited him for a night. And I grabbed a toothbrush and went in the drawer and pulled out a tube of AIM and brushed my teeth. All right. Now the one that I did want to that is moving today is AXP. And this is an important one because this is telling you where the wealthy consumer is trending, right? Like there's Visa, MasterCard, and AXP are the big credit card companies. And AXP caters to a wealthier audience than the other two. Stock's up 1.3%. Pretty nice move. Any hot takes on AXP here, Andrew or Alicia?
Louis Vuitton, I know all the big European luxury houses were all up big too on earnings.
Oh,
so
LVMH?
people are spending on people that have money are spending. Shocker. People with money.
Yeah, they never stop.
Yeah.
They don't stop.
But that's been kind of a long decline, right? Kind of with sort of Europe. So you might get a little surprise out of that if the long-awaited recession never hits. Might be a little bit of a bargain hunting stock.
Andrew, do you remember that when you and I when COVID was starting to happen, and I had made a comment that everyone should buy race because rich people will continue to buy Ferraris?
Yes.
It is up $200 since
which is amazing.
Yeah,
it is amazing.
Like, how many Ferraris can they sell?
Apparently a lot. The thing I don't get is who wants a Lamborghini or Ferrari SUV. Like a lady down the street I saw driving the Ferrari SUV, and it's like, why? Right? Why?
Wow. I guess but I think doesn't Porsche sell more SUVs than anything else now?
It doesn't look that much different than a Ford Explorer.
Oh, wow.
Like,
that's not
there are only so many different ways to differentiate SUVs, right? Like, there really, the Lexus 450, the LS 450, the
Mercedes,
the BMW, they all kind of look alike. They kind of do. Folks, which of these luxury brands really differentiates themselves, right? The F-Pace from Jaguar looks very similar to the Ferrari one, I will
Yep.
say. And the Ferrari, what was interesting is the Ferrari, it looks like the Mustang logo on the back a little bit.
Huh.
And so I actually had thought it was like some weird Mustang SUV, and then I realized it was a Ferrari. Anyway, didn't say it was a great story. So speaking of racing, speaking of Ferraris, it's time to get into what might be the finest Ferrari on the planet and take a ride in Andrew's. Oh, you know what? I'm sorry.
Trading.
First, we have to do trades we like. We're going to get into Andrew's trading vehicle here in a second.
I was gonna stop you, but you stopped yourself, so that's good.
Yes.
You pulled yourself
But
back.
first, I wanted to go through a couple of trades that Leisha and I were going through. We'll get into your vehicle here in a second, Andrew. Your awesome Ferrari.
Keep your engine running, Andrew.
Yeah,
Yes,
don't
ma'am.
don't turn the car off. I wanted to circle back with a couple of our trades. Last week I had said I thought Macy's was a buy. Let's see. On Friday, the 19th, when I said, hey, Macy's looks like it's probably too cheap, Leisha said, that's a good idea. It closed on that Friday at 1763, opened 1782. It's up $1.06. So good for, pretty, and up another 15% pre-market. It's going to break 20, I think, next week. But I think that long play is going pretty well. The one now post earnings, my next long is General Electric. I think it's time to hop in. We had the really nice earnings, sold off, recovered, consolidating post earnings. The earnings are really good. They're in the nuclear space. The implied volatility is about as, it's pretty darn cheap. I don't want that. There we go. It is not excessive at all. So the options are pretty cheap. I'd be looking at a potential. I did lay out a trade already in GE for people, but at Option Pit. But the April 130 calls are about the 135 calls are $4.30, and I think that's about 3 months paying about $4. That's 3% of the value of the stock. That's not a bad little trade. All right, Leisha, what do you got for a trade idea?
I'm watching crude again. It's finally broken out of its trading range. Look at this range that it's been in. Here's my pitchfork on the futures. Wow. It's finally broken out. Here are the continuous futures. I think crude's going to trade higher. I like USO. I'd gotten my option shoppers into some calls yesterday. It's opening down a little bit this morning, but I think USO is going to trade 75 to 76. And I like the Feb 7 expiration.
The Feb 7 expiration for USO.
Yeah, it's in the middle of the week, but it was the cheapest. Implied volatility wise, it was the cheapest. Now that it's opening down a little bit, so you can probably get the 72s and the Feb 7s for about $1.60, $1.55, $1.60.
Oh wow!
Well, it's not very much.
I like those.
Sounds pretty.
No.
Sound pretty
what do you guys think is next for crude? Everybody, let me know. Is crude going to the moon, or do you think this is? Are you with Leisha, or you think we're all wrong that we think this thing's going up? I'm with you, Leisha.
It had this range, same as the crude futures. It broke through the 200-day popped. It a lot of times it comes back and visits some kind of support or resistance. But yeah, I think this has the thin zone on the volume profiles there. I think it's going to try to close that. I think 75 to 76, about
For
75.
USO?
Yep.
All right. You know what you need crude for?
What?
Gasoline. You know what gasoline powers?
Vehicles.
Vehicles. And it's time for Andrew's trading. I knew I could always find a way to turn this into the it's time for Andrew's trading vehicle, where he will walk us through his trade idea and also break it down from a strategy perspective. So everybody, Leisha and I are gonna kick back, and we're gonna let Andrew cook, or excuse me, we're gonna let Andrew drive.
Drive it away.
Andrew, drive the vehicle.
Take it away, Andrew.
All righty. Max, you put up the first chart, the other chart. There you go. Cool. Also, I did have a TSM calendar that I'm working on a double on that trade from last week. So that's good. The Feb 9, Jan 26. I rolled the Jan 26 118s up to the Febo 2 120s for a nice credit. So I'm pretty much, it'd be hard to lose on the trade at this point. It's up about 40% right now. Anyway, that was my trade last week. This is an example of a volatility chart that you have a couple different vols here. I'm not going to tell you what the name is yet, but when I'm teaching students in Option Pit, you have to make a decision on what you want to trade. Do you want to trade the underlying? You know, where's it going to go? Like, okay, I like Apple, I like Nvidia, I like it to go higher, higher, higher. Or do you want to trade the volatility? Like, what are you trading? So today's trading vehicle is, when do you trade the stock, or when do you trade the volatility? And how I make the distinction is when I think there's some good edge in the option pricing, I'm just going to trade the vol, and I don't even care what the stock is, to be quite honest. I use the stock as, no pun intended, as a vehicle just to trade the option. I just need it to move. So that purple line is 90-day volatility. So that's the average volatility of the last 90 days for this particular name. And I'll just tell you, it's 3M. And just the fact the stock is moving like all over the place. Now, it did have a big bounce just because the stock is down 10% or something on earnings. And it's since bounced $5 or $6 from that level. So it is still moving around. Now, what you will see, the green line is 90-day implied vol. So that number is trading at the very bottom of the last year. Actually, it's making like a 2-year low, I believe, almost a 3-year low. So what that tells you is, you know, on average, 3M, the average volatility for the last 90 days has been, I believe, before that drop, I discount the drop, but it was more like in the mid 30s. And you can buy volatility for about 22%. So in this case, I kind of want to just trade the vol, trade the range. So how I do that is I want to buy a strangle. So I'm not even looking at the chart yet. And to be honest, like for this type of trade, don't care. All I care about is what the option prices are going to cost me for a period of time. So we can go to the next chart. The next screen there, Max. Thanks. And now you look at the pricing, right? So I got that little red square there. So the March par calls, I remember the stock was 109 like 3 days ago. And it doesn't mean it's going to get there tomorrow, but it is bouncing a little bit. But I can go out to March and I can buy the March par calls for $1.30 in a $96 stock. That is very, very, very inexpensive. I could also buy the 90 puts for about $1.15. So, you know, we have FOMC is coming out, you know, market toppy, all that kind of stuff. It would take for that strangle to pay, just as an example, for it to be like a positive gain. I really only need the stock to go up $1.50 on any day in the next week, and the strangle is going to be green. If the stock does move back down to 93 or 92 where it was after earnings when everybody was hating it, I didn't think the earnings were that bad, but everybody else did. You sell your 90 puts for $2, 210, and you're going to end up with the calls for nothing. So that would be my trade here. Is this? I'm just trading what I would call trading the vol. If 3M actually goes up, back up to 109, woohoo! We're going to win. But in the meantime, the options are so cheap relative to the recent range. I think it makes a good strangle candidate. And that's how I trade the strangles. So I don't really like having to worry about direction. If you want to just do the straight call, I would buy just the straight 100 calls. If you broke 95, I'd buy the 90 put. And then again, trade the range. But I don't think it's a bad flyer to buy the par calls for 130. They're not very expensive. You could stop them at $1 if you wanted to, but the decay on them is minute, considering how much duration there is left in the option. So in this case, my vehicle is, do I trade the underlying, thinking that's going to go up or down, or do I just trade the vol and try to buy some cheap options and just see how much the stock moves? So in this case, I am doing the latter. So that is my Andrews trading vehicle for Friday the 26th.
So your vehicle is a long call. That's an easy vehicle to get in.
Long call, long strangle, but yeah.
All right. Long call or long strangle, either or. Those calls are cheap, I will say. So today, what I wanted to talk, we've got about 5 minutes left here. I wanted to circle back to Intel, and I want to show you guys when a long is not a long. If you want to show my screen, I want to concentrate right here. I know this is kind of hard to see. I don't know if we can zoom or not. But we have the trader sold 10,000 of the April 42 puts and bought 10,000 of the 55 calls. Now, that is called a risk reversal. Selling the put, that gets you long delta, that essentially long stock in option, long exposure to the stock. Buying the call, that also gets you long exposure to the stock. It is actually a pretty darn bullish trade on its surface. But what if I do this trade and then I dump 10 million shares of stock? Am I still bullish? No. So what happened, it was interesting the timing of this right before earnings. And it's interesting the placement in that they picked Leisha's ultimate spot where Intel could go to, and then a breakout level of over 55. What they basically said was, I'm done with this stock. I am going to buy it back if it trades below 42. And I want to get back in the stock if it trades over 55. So pretty interesting play by the trader and pretty interesting move. And lo and behold, the trader probably pretty happy with the play that they made. Sometimes, and this is really key, this is the key to understanding order flow. Because if you follow order flow, if you went long every time one of these option trades looked like it was long, you're going to lose more than half the time, because most of the time there is stock or a hedge or something involved. And in the case of Intel, this is the case of a long being a short. This was a stock replacement, so the trader could get out of their underlying. And so even though it looked bullish on the tape, when you dig down deep, this is a sneaky bearish play. And lo and behold, Intel is down 10%. All right. Well, we've got about a couple minutes left here, Andrew, where we have gone from up big initially after the bell to PCE rallying and then selling, to now we're basically flat. We're down three points for the S&P futures. NASDAQ futures are having it a little bit worse. I want that. NASDAQ futures are having it a little bit worse. NASDAQ futures are down 67 points. Bonds are flat. VIX futures are flat. So coming into today, right now, pretty flat. Where do you think we end up today, ATG?
Well, we're 6 points from what 4,900 for SPX.
Mhm.
So I think there aren't enough good earnings to drive, but I think that the inflation number is good. So as long as the Fed's not raising, stocks seem to be going up. I think that's been the MO for at least since November 1st after
Yeah.
the month of October.
Yeah.
One thing I will say though now is the red-headed stepchild of indexes. The Russell is trying to make a little bit of a move.
Mhm.
And it's how much is it up since last year? It's barely up anything at all, right?
Yeah. No, it's down on the year so far. In
Right.
fact, the equal weighted S&P is down on the year. The only indexes that are up on the year right now are really the NASDAQ and the S&P because it's been
Right.
driven by 7 names. This has been a very, very tight-knit rally.
So I like to see what Leisha's take here because it looks like IWM is trying to make a move higher this morning. I'm running a couple of basically credit calls in IWM from I forget which product. Oh, Easy Button. So we're basically into the calls for nothing or a credit. And I want to see how long I should ride them. I think we should get to 200, but what do you think, Leisha?
IWM is in this little range right here.
So it needs to get
193
out.
half on the downside and 198.85 on the upside. You want to see it bust out of that 198, trade over 199, and then it could revisit that 205 up here.
Okay.
Right now it's stuck in that range.
Maybe I'll just take the money then today and just call it a day.
Trying your MACD's almost it's
Turning
beginning
positive
to look a little positive, but
because it's basically just been an ignored index.
Yeah,
like
RSI and MACD finally starting to look a little bullish here.
Right.
So,
might be an interesting one. These names have to catch a rally if we're going to keep going, right? The money can only stretch. Microsoft's now a $3 trillion company. These things can only get stretched so far.
Well, what's amazing is Microsoft moved from cloud to AI. So you remember that cloud thing? Who cares about that?
Cloud was huge.
Yeah. Now they're so hey, that's impressive.
I mean, it just goes to show you how bad. I mean, Steve Ballmer may have been one of the 10 worst CEOs in history.
He's
up there with Jeffrey Immelt, Steve Ballmer. Let's see, who else was a terrible CEO? The last 3 people that worked at IBM,
or AT&T.
Everybody that's ever AT&T can still. There's a good list. Maybe next week we're. Do you guys want to hear this? Our top 10 worst CEOs in history. Maybe Andrew, me, and Leisha will compile our list. Who wants to hear our list of bad CEOs? All right, Chad Steelberg, he'd be on there. I'm kidding, not Chad Steelberg. All right, Leisha, what do you got for the rest of the day? You think we're gonna rally?
I do.
Yeah.
Just I think the bonds are still the key, and yeah, I maybe not a ton. I think it's going to be a quieter day, inside. Maybe a little more consolidation here, and then probably into next week with waiting on the Fed, right?
Yep.
But yeah, I'm thinking.
Yep, I'm with you. I think the S&P is gonna break and close above 4,900 for the first time. That's my take. I think today's the day we finally close above 4,900. I'm looking for a close in between 49.10 and 49.20. That's I don't know the futures can break 49.50 today, but I think we've got a clean break above 49.25, and it's going to be a pretty good day. All right, folks, it is 8:17 Central, 9:17 Eastern, 6:17 Pacific. It is time for us to bid you a adieu. So for Andrew T. Giovinazzi, the Oracle of Options, and Leisha J. Leslie, the Queen of the Candles, I am Mark Sebastian, your only option. And this was Option Pit Live. We'll see you next Friday, folks.
Take care.
Bye-bye.